if you haven't paid attention to this, which I believe, if you haven't, probably you're living on the rock, or just you don't pay attention to your finances, and this is not something you should actually do a little more better job at. Why? Because right now, the value of our dollars is decreasing, and it's decreasing rapidly since inflation started. And right now we're sitting at what, almost 9% or 9.6% inflation. Some will say 8.5, but whatever. It's still very high. It's never been this high in the last 46 years. So still very high, because what you may not know is your 100%, I mean your $100, your $100 that you use to either buy groceries, either buy, clothes, jewelries, electronics, go to dinner, get out there, enjoy life, whatever the case might be. Yeah, those $100 2 years ago or just last year, right now are worth $9.6 less. But on the other hand, some of the stuff you used to buy for $100 are now at least demanding or requiring you to, spend $130. So not only your $100 2 years ago are now worth 96, 90, 93 something, but on top of that, you have to pay that price increase because of inflation. So you're losing on both hands. All right. And some people will natural reaction to this will be like, okay, well, the only thing now for me to do is to keep my money in the bank, because I'm hearing, signs of recession, noise of, stagflation, noise of economic crash. And lately the stock market hasn't been doing well, so that reaction, even though natural, because in terms of danger, in terms of times like these that are fear, uncertainty, doubt out there, you want to protect your money. You want to make sure that your money will not lose its value more than it already been is already losing, right? So it's natural for us to kind of find that shelter. But the thing is, if you want to be smart and grow your net worth, that is not the right move to do right now. Because not only the bank wants to keep you poor, I mean, we're going to talk about it in a separate video, maybe another day, but it is not the right way to go. Because terms like these, it's actually when you need to be smart by how you approach your money, because you want to make sure your money continues to grow. Especially in times of inflation, you want your money to outgrow inflation. And how do you do that? Well, if you have the ability to work 26 hours a day, 26 hours a day, a metaphor for me to say, if you have the ability to find, X amount of jobs that are going to give you that additional extra income, but I don't think it's realistic. Some of us have a job that will not even allow them in terms of timing to do something else on the side. All right. So how can you take advantage and be smart in a growing inflation? Well, you have to invest. You have to invest, because your investments doesn't require your time, at least to the same amount or to the same extent as if you were working for somebody. So it's not a day job. That's number one. Number two, your investment have the ability to outgrow inflation. All right? Because by keeping your money in the bank right now, if you put 100,000 right now in the bank, you will be lucky if by the end of the year, if rate stays the way they are, you will be earning $15 on 100,000. So your money is not doing anything. So not only you are, losing value on that, but you're also losing a lot on the cost of opportunity. Like how much more money will you gain if you invested that $100,000 in something? All right. That's the cost of opportunity. So you want to make sure you invest your money so that it can, the return on your money can outgrow the pace of inflation. Now, if you want to go like safe, you can invest that money, or your money you don't need for the next 6 to 1 year. You can invest it into an I-Savings series bond. It's a bond that is disclosed, that is set up for investors or retail people like you and I, who want to, have the same amount of high interest exactly as the inflation is, without having to put that in the bank. All right. So it pays you exactly what inflation is right now, which is kind of high, a lot high, 9.6%, and your money is guaranteed. So the only thing is you have to keep that money for a whole year, and you can't touch it even if you die. All right. So, and the maximum to that is 10,000. So if you're married, you might want to have 10,000 for you, 10,000 for your wife, because 9.6% on your money is like 960%, almost 1,000% more than what the regular bank out there will give you now on a high savings account. So no brainer. Now, if you want to be a little more aggressive, right? I'm not saying reckless, a little more aggressive. You need to seize this opportunity right now in the stock market, because the stock market is on sale right now. I know it sounds scary and it looks scary, and it is scary, but what is causing the market to go down now will not last forever. It is inflation, the war in Ukraine. At some point, those things will smooth out. Those things will settle down and give the ability for the market to go back up again. So when inflation comes back down from 9% to 2-3%, which is the job of the Fed right now, and they're working at it, the people will feel safe again to put the money back into the market. Because right now, with high inflation, people are scared and concerned that high inflation and high interest rates to fight inflation will push companies to not grow as expected, because those companies in the stock market need to have use loans, use margin, use debt in order to, hire people, in order to extend the business, in order to acquire new market shares. And with high interest rate, it means they're going to pay a lot more on those. So it's going to refrain them from doing so. And by refraining from doing so, they're not going to have the resources to grow anymore. And when a company doesn't grow anymore, you as an investor, it's not inciting you, it's not interesting for you to hold the stock of that company. But when things smooth out, then the market will start, rebounding and continue to grow way beyond what we're seeing right now. We saw it at many, many, many times for the last 25 to 50 years in this market. So you want to buy now. You want to make sure you invest now, because by investing now, when the rebound happens and another rally happens, that's how and when you are building wealth, because your future self will thank you for what you're doing right now, and you don't have to lift any finger. All right. So when you sleep, your money is doing the work and growing for you. And that's the ultimate goal of attaining and achieving financial freedom. Now, another way will also be to invest into the real estate market. I know prices are kind of high right now, but they are on a downtrend. And I believe they're going to continue to be on a downtrend for quite some time, depending on locations. All right. Now, if you want to invest in the real estate market, that is also a good time, because nobody knows exactly when everything will settle, because you want to make your money work for you, right? So if you can have an investment into a house or a property that will give you that income at the end of the month, when you subtract the mortgage, then you have a cash flow. That's also a way to outgrowing inflation. And then you can use that money and put it maybe in an ETF, an index fund, whatever. So you're always looking for ways for your money to outgrow inflation in order to stay on top. All right. So that is, for me, something we need to pay attention to. Otherwise, we might end up a lot more poorer, if you see what I mean.